PRovoke podcast is brought to you by PRovoke Media and produced by the international broadcast specialists Marketeers. Support for this podcast comes from Notified, the integrated, intelligent and easy-to-use PR software. Get a free demo today at notified.com.
Welcome to the PRovoke podcast. This is Arun Sudhaman and I'm joined by Paul Holmes. Paul, we haven't had you on the podcast for quite a while, it seems.
No, I've been keeping a very low profile.
Well, good. I hope so, because it's dangerous out there. There's a pandemic going on.
That's what they tell me.
This, in case you hadn't heard. But of course, you're on to discuss the big news in the global PR industry this week. If I was to say to you, Paul, 12 months ago, as we were entering, I suppose really we'd entered the pandemic 12 months ago. We were kind of in the worst of its throes in many respects. If I was to tell you then that the global PR industry would decline 4% in 2020, would you have believed me?
I would certainly have accused you of wearing rose-tinted spectacles. I mean, I remember where we were a year or so ago, and obviously our fate is inextricably tied to the vicissitudes of the public relations marketplace. And as you'll recall, where we were really was a zero visibility world. I mean, we'd never experienced anything like this before. We didn't know if it was going to be a minor setback, a major setback, or a complete catastrophe. And I think, like most of our clients and most of the people we cover, we had a plan A, a plan B, a plan C, and somewhere in our desks a plan Z, which was for a public relations apocalypse. And if you'd asked me then to predict, I would probably have said it was going to be somewhere between bad and very bad. And bad would have been a 10% decline. You'll recall better than I do because you were very hands-on with this, but we did some research around the agency business. I mean, we did several waves of research, but our first wave of research was about this time last year. And as I recall, the predictions from agency leaders were, if not dire, at least gloomy.
Yeah, no, they were quite grim, actually. The first wave of research we did was quite depressing, as I recall. And it's funny to talk about it now because I feel like I've blocked a lot of that period out. In fact, that the conversation we had where we discussed Plan A, Plan B, Plan C, and Plan Z, I had actually completely blocked that out until you just reminded me of it now. Because it really was a crazy time. But of course, the reason I asked you that question is our global rankings research came out last week, a little later than usual, because for whatever reason, the German firms reported a little later than usual this year. And the headline finding from that research is that the global PR industry only declined by 4% in 2020. In US dollar terms, the picture was even better, that the US dollar was weaker against many currencies last year. And in US dollar terms, I think we were something like at parity, the size of the global PR market compared to 2019. So all things considered, Paul, it would appear that the industry not only avoided the worst, but maybe even prospered in relative terms.
Yeah, in relative terms, certainly. I think, I think the industry should be extraordinarily proud of its resilience. And I think we should be very pleased with, just how mission critical public relations has become in several aspects. I think if you look at the numbers overall, it's clear that we declined far less than most adjacent disciplines, and I would put that down to the fact that there are lots of things that other firms specialize in that PR firms can do quite well, in some cases very well. There are things that public relations can do, particularly in the stakeholder arena, dealing with employees and managing through crises, that nobody else can do. And that obviously stood the PR agencies in our survey in good stead during the past 12 months.
Indeed. One of the, there were several interesting findings, I thought, from the research. One of those, indeed, was that the bigger end of the table, the top 10 firms, the big agencies, which typically have not grown at an especially impressive clip over the past decade, actually proved to be more resilient last year, at least, than their mid-sized peers, which was kind of a role reversal. How would you explain that?
So I think it was a year in which your fate was more or less determined by your portfolio. There are some exceptions to that, obviously, but first of all, those firms that were overexposed in areas like travel and retail suffered the most. Those firms that were pure play consumer agencies were likely to have a difficult time, especially if they had a sort of large events portfolio. And I think that the large agencies benefited from a balanced portfolio. So in many cases, even though the consumer businesses were struggling, they had enough corporate, healthcare, financial services, and to a lesser extent, technology. But they had enough of that kind of business that they were insulated from the worst of the fallout. I think it was those firms that were overexposed in consumer, and that's a lot of mid-sized firms in the US, and it's a lot of firms in continental Europe that had the hardest time.
Yeah. Although, having said that, the German firms did reasonably well. Another trend worth noting, similar, I think, to some extent to the big versus mid-sized debate, is the difference between publicly held firms and independent agencies. And as you know, for as long as we've been tracking growth, which is more than a decade now, we've seen independent PR firms outgrowing their publicly held peers by a factor of around 2 to 1. That gap narrowed last year. Publicly held firms performed better. They still didn't grow as fast as independent firms. But in particular, the bigger publicly held firms, the big four, let's say, the big four holding group owned firms, were the best performing of all publicly held firms, which I think speaks to your point about bigger portfolio-based agencies. But I guess the question I have is, do you see the independent publicly held divide shrinking in the short to medium term, or was that more of a one-off blip, you feel, last year?
I think I'm not going to, on the basis of one extraordinary year, reverse everything that I believe to be true about the PR market, and that's based on observation over the last 25 years or so, when there's been a clear there has been a divide between the publicly traded companies and the independents, and my suspicion is that the independents will continue to outperform the big publicly traded. I just think we're living in a world now where the advantages of nimbleness, of the ability to sort of improvise, to think quickly on your feet, that ability is at a premium. And it's an advantage that is almost insuperable if you're publicly traded, because there's a bureaucracy that you have to deal with that the more entrepreneurial firms just don't have.
Well, one of the other benefits. Sorry, go on.
No, I was just going to say, but last year was clearly a year in which the advantages of scale were more evident than they have been for a while. It'll be interesting to watch over the next 2 or 3 years, and if I'm wrong, then we'll find out fairly quickly.
Yeah, one of the other benefits, of course, of independence, as we've discussed before, is that the business is being run typically for the benefit of staff and clients rather than shareholders, which, of course, is also a nod to this whole idea that all stakeholders are equal, and shareholders do not necessarily need to be the most important out of all stakeholders, which is a trend in terms of the broader public relations industry, in terms of the services that PR firms are providing, and it's a trend that should play to the benefit of public relations people, if you accept that this idea of stakeholder capitalism is a real thing. Do you feel there was a stakeholder capitalism dividend in 2020?
I think it was a year. I think it was a year in which, first of all, we saw the resilience of the stakeholder capitalism idea, right? Because it clearly presented companies with an opportunity to abandon anything that was nice to have, in favor of what they really needed to have. And we've just finished judging the Sabre Awards, and there was certainly no decline, and probably a fairly healthy increase in the amount of purpose-driven work. There was a healthy increase in employee communications, which indicates that particular audience got a lot of attention. I mean, I feel like in a very difficult year, lots of companies paid more attention to their secondary stakeholders. I mean, if you accept that shareholders are the primary stakeholder, which they have been for most companies, I feel like last year was a year in which companies actually paid more attention, not less, to employees and customers and communities. So that was evidence for the idea that that stakeholder capitalism is here to stay, and I think I think companies benefited from that focus. I think it had a tangible payoff.
Do you think it's here to stay?
I mean, I'm always hesitant to predict that something is permanent, but I think the trajectory is certainly towards more stakeholder, less shareholder. I think I think one of the trends that we identified when we talked to people about their forecasts for 2021 was renewed emphasis on ESG, and in particular on the S. On social performance. I think there are all kinds of pressures now from the marketplace, and indeed from the investment community, that are forcing companies to take ESG more seriously. And I think I think it's very difficult to backslide on that. And right now, I would say that what's going on in corporate America in particular, but around the world really, looks much more like a race to the top than a race to the bottom, which is not where we were 10, 15 years ago.
Do you not think it feels a little bit like ESG is being taken more seriously because shareholders are taking it more seriously?
Oh, absolutely. I mean, I think, when you saw some of the big institutional investors in the US, and BlackRock is the obvious example, start to really emphasize ESG as one of the criteria that they're most focused on with their investments. I think that was the point at which, it stopped being this sort of nice cosmetic overlay that you tried to place on your operations without making significant changes, to being something genuinely sort of substantive and ingrained into the business. And I don't think that would have happened without shareholders coming to realize that ESG, there's so much debate over nomenclature, whatever you want to call it, purpose, CSR, ESG, whatever, that this was a source of competitive advantage, not a bone that you threw to woke consumers to alleviate the pressure that they were able to put on your company.
Yeah, indeed. Our research throughout the last 12 months, so not the rankings research, but the surveys that we've been doing that you referenced, the waves of surveys we've done of the industry. I think we've done 4 or maybe 5 now with our friends at Sticky Beak. Revealed quite early on last year, actually, that corporate communications was proving very resilient, as you pointed out, and associated areas such as healthcare, advocacy, B2B tech, which I sometimes associate with corporate, only because it's not consumer, and of course healthcare, which is not really, it doesn't fit as neatly with corporate, but is definitely not the consumer end necessarily. And of course, there were specific healthcare demands last year, but all of that benefited agencies, as you said, with strong offerings in those areas. But it also came, I think, after a period of time when consumer marketing was kind of seen as the industry's, I don't want to say holy grail, but almost like the promised land, where by figuring out how to tap into CMO budgets and marketing spend, PR firms could play with ad agencies, and they could be at Cannes, and they could be earning loads of money and winning tons of awards. And do you think the industry over-indexed on consumer in the years leading up to the pandemic?
Well, look, I think over the last decade, what we've seen is incremental growth in the corporate business. It's been slow and steady, but it hasn't been glamorous or exciting. Meanwhile, there were some very sexy opportunities in the consumer arena. I think that the emergence of digital and social media as pretty much the primary channel by which consumers get information about the products and services that they're buying, and misinformation, for what that's worth. I think that I think that the rise of digital and social media created a whole new set of opportunities for PR firms, both new business and business that they could take away from other agencies. And that obviously was exciting because that was new and additive and not just incremental growth. And so that's where we as an industry were chasing new revenues, and I think and investing in new capabilities and adding new talent, and that I think made perfect sense. I think that those who viewed that as an opportunity to deepen client relationships and become more mission critical to clients, rather than simply viewing it as another way to make quick money. And I'm nothing against quick money, but rather than just seeing it as an opportunity to do more, but seeing it as an opportunity to become more important. Those were the firms that sort of solidified their gains over the last 12 months. I'm looking at firms in the US like Zeno, which is a mid-size agency. If you'd asked us or anybody else, what Zeno's strength was before last year, I suspect that we would have said consumer. It's a firm that has been a finalist for Consumer Agency of the Year several times. You can correct me if I'm wrong, but I'd be very surprised if we'd ever had it as a finalist as Corporate Agency of the Year, despite the fact that it has a robust corporate practice. But the consumer work that it did was well up the value chain. Because of its investment in things like data and analytics, and because it blended consumer and corporate so effectively. And so Zeno had, I think, in context, a spectacular year. I mean, I could make the case that even though the absolute growth number wasn't the best they've ever had, last year was, in context, the best year they've ever had.
Is that how consumer firms find their way back from 2020? Is it about trying to move upstream? So it's less about the tactical work, maybe less about supporting the advertising. I mean, it sounds logical, but presumably it's not that easy.
Yes, it's logical. No, it's obvious. Absolutely not that easy. You can see that by the range of performance among specialist firms last year. But yes, I think that's been true for a while, and last year just underscored how true it is. The more you can make yourself indispensable at a senior level to your clients, and this is almost a truism, right? But the more you can make yourself indispensable at a senior level to your clients, the better things will be in good times and bad.
There's sometimes this kind of zero-sum thinking, though, I feel at firms, not all firms, but at many firms, whereby if they're going to focus on one area, then it's to the detriment of another. And I think there was a little bit of that around in terms of prioritizing consumer marketing spend. But last year, I think, reminded us that corporate is incredibly important, and is even fashionable, particularly with the shift towards stakeholder capitalism, the rise of employee activism, the social movements we've seen in the US and beyond. And the interesting thing, of course, is, as you said, no other advertising, digital, they can't really do corporate affairs.
Yeah. Look, I think what last year showed us, as much as anything, was the way in which the membrane between corporate and consumer has become permeable. Um, you know, if you,
Corpseumer.
yeah.
Sorry.
Well, I'm sorry. Yeah.
Sorry.
But um, I think if you're doing consumer now without understanding the multi-stakeholder implications of what you're doing, then you're really not you're not part of the solution. Um, you know, Audiences interact with each other; they're not separate and discrete anymore. Corporate reputation is infinitely more important to consumer marketing than it ever was. There was a time when corporate social responsibility was clearly part of the corporate practice, not part of the marketing mix, right? And now, I know we've changed the nomenclature again, and we're talking about purpose more than we are about CSR. But it's clear that is about corporate behavior, but it's about corporate behavior that consumers take incredibly seriously. And so if you don't understand corporate, I'd argue that you can't do consumer properly in this era. And so those firms that were able to bring their corporate and their consumer practices together, their employee engagement and their consumer practices together, even to a certain extent, their public affairs and their consumer practices together. I mean, if you're talking about political issues like Black Lives Matter, which was, a huge issue for corporations in 2020, their hiring practices and their consumer profile together.
Yeah.
All of those things are interconnected now in a way that they weren't before. This, by the way, might be another key to the relative success of the larger agencies last year, in that all of the larger agencies have all of those capabilities, right?
Yeah. Right.
So, Weber Shandwick, Edelman, Fleischman, Burson, the BCW, the firms that did well last year, or relatively, all have corporate, employee, crisis, public affairs, and consumer practices at fairly significant scale. Not every mid-size firm has all of those capabilities, again, I would make the case that historically, the big agencies that have all of those capabilities have found it more difficult to blend them than the mid-size agencies have. They've had more internal bureaucracy than the mid-size agencies. And so that has been less of a competitive advantage than it should have been because of the bureaucratic hurdles. But and this is the caveat to what I was saying earlier, I guess. If last year marked the year in which they figured out that they had to break down those internal barriers, and they successfully broke down those internal barriers, then it could be that they figured out a way to maximize their greatest advantage.
And we shall see.
Yeah,
sorry, go on.
I mean, in that case, we will see the bigger global publicly traded agencies beginning to match their independent brethren in performance terms.
Yeah, we shall see. One of the things I think that happened in 2020 was that we saw a reduction in what I would call consumer-facing marketing spend. Many companies were less active about kind of overtly selling, and there was far more activity in areas that, as we've discussed, benefited public relations. So things like CSR or ESG, employee engagement, health and safety, and what consumer messaging there was often around things like, we're in this together, and just trying to help people get through lockdown rather than necessarily trying to overtly sell product. Presumably at some point, and maybe it's already happening, that's going to change. With that change, do you foresee any impact on public relations spending? Will it start to move back towards advertising, perhaps?
I think that what we'll see in the next 12 months is a more balanced approach. I still think that the things that came to the fore over the last 12 months, particularly the purpose-driven marketing, will continue to play a huge part, because I don't think that was totally crisis related. I think that was part of a realization that is a deeper level on which to connect with consumers than buy more of our stuff. I just think purpose gives you a more compelling message. And I think, we'll probably see a slight shift back to a more balanced approach. But I don't think we're going back to where we were. I mean, one of the cliches of the last 12 months is this idea that it didn't really change direction for anybody. It just accelerated directionality that was already happening. So, and you can see that in a number of respects. I mean, the move away from live events to more virtual and digital events, for example, wasn't something that was going to happen anyway. Remote working. That was something that was going to happen anyway. It just happened a lot quicker. Because of the changes that were forced. And I think the move towards purpose and to a certain extent, the move towards corporate consumer interaction or interwovenness, whatever the word is, I think that's another example. It's something that was happening anyway. It's just going to happen a lot faster now because of what we've experienced over the last 12 months.
Okay, well, that's encouraging. And now, possibly the big question, the $1 million question, maybe the $13 billion question, if you take the number from our rankings. So if you look at it from the in-house perspective, again, a key finding from our research has been that the corporate communications function has never been more valued. And it's not too hard to see why. All of the things we've talked about on this call. You also just mentioned crisis. And of course, crisis has been a huge driver. And crisis is something in which the comms function is expected to play a very big role. And I suspect lawyers have been less involved because no one really needs to have heard from lawyers during, the worst of the pandemic necessarily. Will that elevated importance in terms of corporate communications, which maybe in some cases has led to elevated budgets, will that prove to be more transient than permanent, given everything you've seen in the history of the corporate communications function?
If I was to assume that the past is a good predictor of the future, then I guess I'd be fairly skeptical and say that that corporate communications is always more important during a crisis. And what we had last year was actually sort of a 12-month, I mean, now at this point, we're headed for an 18-month crisis that affected every single company in America and around the world, right? And is going to continue affecting their operations in developing countries for the foreseeable future, unless we can solve the vaccine mess that those companies are still experiencing. So, I guess I would be skeptical if I looked at how that's gone in the past. But I just think, you know, you've got to look at some of the other trends that are happening, you know, we spent a lot of time talking about ESG already on this call, and that's not going to go back to normal. That's not going to go back to where it was 10 years ago. That is going to continue to be more important. And if corporate communications demonstrated its ability to lead or even really to contribute substantially to ESG performance, then yeah, I think its role in the organization will be heightened and more serious than it would have been 10 years ago. You know, even so, I guess even if it drops back a little because last year was a special year, I think the trend is still towards public relations, corporate communications, whatever you want to call it, playing a more significant role.
I guess it's sad that it took a pandemic for companies perhaps to realize how valuable public relations is.
Yeah, but I mean, the idea that you know a good crisis every now and again is good for the corporate communications function is not a new one. It's not something that you ever hear spoken out loud or quite as crassly as that. But I think we've always, as an industry, been aware that, you know, a really serious crisis forces management to understand how much they need us. And, you know, the fact that crisis happened to every company simultaneously, and it was a crisis that really did demand communications with all your stakeholders, over a long, sustained period, really. You know, one would think that would have helped public relations cement itself as a vital leadership function.
Yeah, as mission critical, as you put it.
Yeah.
Yeah. Well, let's hope so. You know, if nothing else, if this terrible, awful tragedy that we've kind of all had to live through, if it has kind of helped companies understand how important it is to meet, you know, and address and balance the expectations and needs of all stakeholders, then it won't necessarily be a bad thing in the long term. So I suppose maybe, Paul, it's time for a manifesto for a post-COVID PR firm. Who knows?
Yes, maybe it is. Maybe it is.
Maybe it is. On that note, I will leave you. Thank you so much for your time. And,
always fun.
Take care. Hopefully I'll see you sometime soon, somewhere that doesn't involve a screen, but I'm not holding my breath, unfortunately.
Yeah, no, it would be nice to have some interaction among the management team that isn't via Zoom. But but I'm not sure that's going to happen anytime in the next couple of months.
That's true. Well, at the very least, hopefully you'll get to see Maya and Sarah in Brighton. So that will be good. That will be fun. So so that would be cool. So enjoy that. Yeah. So a hybrid event. Touch wood. Everything in the UK continues on a kind of upward trajectory, and we can run that event, which I think is on the 24th of June. You can check it all out on our website. Great. And you can find all the rankings, of course, information on our website too. Thanks to all the firms that participated. I really have to give them a huge vote of thanks, especially those that declined. I mean, so many firms that declined, some very significantly, still took part. I think that is so valuable for the industry as a whole. You know, without that kind of commitment, we can't really do these rankings.
It's easy for me to say, but if you're a PR firm and you're not committed to transparency, maybe you're in the wrong line of business. But no, what you say is absolutely true. It was an easy year for companies to forget.
And many did.
To provide us with the information. As you say, we had more absentees than we normally do. But those firms that did provide numbers and were upfront and transparent about their performance, I don't think that ever hurts. I think it's an indication of integrity, transparency, honesty,
and a commitment to something bigger than just your bottom line, right? Because it's almost like a commitment to the industry, which I think is laudable.
Yeah, and the data is important. It's incredibly important for us to be able to benchmark and track and monitor how the industry as a whole is performing, and contributing to that is something that we're very grateful for.
Yeah, and to those of you that didn't, well, we estimated your numbers anyway, so there you go. Please feel free to get in touch if you think we were wrong, or most likely we may have overestimated. Who knows? Thank you so much, Paul. We'll be back on the podcast soon. Thanks.
You have been listening to the PRovoke podcast, brought to you by PRovoke Media and produced by the international broadcast specialists Marketeers. Support for this podcast comes from Notified, the integrated, intelligent and easy-to-use PR software. Get a free demo today at notified.com.